Hello friends, this is Dr. Amarjit Kaur, Professor of Accounting and Business Communication at the Department of Management, Gurugram University, Gurugram. This is my privilege that I am here with you to talk on organization of finance function in an organization. So friends, we are going to discuss in detail the finance function organized at different levels and how those managers who are working at different levels for finance function, what are their assigned or possible work areas, or which areas do they work in, or what falls under their purview. This is what we are going to discuss. So as we discuss, at the top we have board of directors, then we have managing director, under that we have chief finance officer. Okay. So the chief finance officer is supported by two pillars, controller and treasurer, and then we have tax manager, cost manager, financial management manager under controller, and cash and credit manager under the treasurer. So this is the general organization of the finance structure in any organization. So the agenda would now be to talk about the function of everyone we discussed, beginning from the chief finance officer to controller and treasurer. So number one is the chief finance officer. So what all function does a chief finance officer play? So his first job is formulation of policies, then second is strategic decision making, third is liaising with top management, and the fourth is financial structure. So let's discuss or understand these aspects in detail. So first of all, the chief finance officer, his role is, his job is to formulate policies pertaining to or regarding finance function. So be it planning of finance function, be it structure itself, that how the finance function be structured is also decided by the chief finance officer, of course after consulting the managing director or chief officer of the company, CEO. So he will make the policies for debt collection, he will make policies for receivables, he may finalize or formulate policies for inventories. Of course, he seeks inputs from treasurer, controller in these regards. He is supported by so many people, but he is the one who finalizes it. He is the one who approves these policies for various functions of finance regarding, for example, if the companies have to invest in any plant projects, they always have a cut-off rate. They need to decide the cut-off rate. So even that is decided by the chief finance officer. Companies need to decide the standard for payback period, the payback period. How much is the minimum payback period required by a company to recover its investment? Even that is formulated or decided by the chief finance officer. This is the first thing, that formulation of policies for preparation of financial reports, policies for pertaining the budgets, etc., etc. Every policy formulation comes under his purview. Then all those strategic decision making aspects, be it investment in another country, mergers, acquisitions, be it disinvestment, these are the strategic decision making aspects of finance officer, chief finance officer, which falls under his purview. Then liaising with the top management. When I say top management, the managing director, the chief operating officer of the company, the top management, right? Of course, even CFO is also the part of top management, but he has to liaison with people senior to him. Was in the hierarchy, we have chief CFO at the third place in a normal standard old organizational structure. Nowadays we have matrix structure. So the matrix structure has a very different type of defined structures. So but what I am referring to is a very standard structure for a corporation, which is well accepted, which is widely even applicable even today's time, so not outdated one. So liaison with the top management is the another function which chief finance officer has to take care, because policies are always formulated in the light of vision and the mission statement which has been decided by the CEO of the company. Managing director may also play a role there. So his job as a chief finance officer is to liaison with the top management. He would seek inputs even regarding the formulation of policies. He would seek their advice. He would seek their inputs and their suggestions for all the strategic decisions. He may get guidelines from the top management for disinvestment, for expansion, for modification, because that really involves a huge chunk of, huge amount of investment. These decisions really are very long term. They affect the operations for decades, right, and really involves a very huge amount of investment. So cannot be taken in isolation. This guy, chief finance officer, has to consult the top management. So his job is to liaison between the top management and also to, of course, to guide the lower management as well. Then the financial structure is something which is decided by the chief finance officer. Financial structure means the composition of shares, the equity part and the debt part in the total finance being used by the company. So financial structure is one thing and the funding of the structure is another thing. So capital structure or financial structure is the commonly used word. So how much percentage, if let's say if a company is using 100 crore in total, so how much part of the 100 crore will come from equity or from debt source, and then within the debt source we may have debentures, bonds, special premium notes or treasury bill, commercial papers, but not TB, of course a company cannot issue. So we have to decide about the kind of the structure. It also decides about the equity, that either we will be using pure equity or we will be using the hybrid one, the preferential capital. So these are the decisions which are taken by the chief finance officer. Further to this, he has to decide about the crisis communication. So recently in our country there was one organization, I don't want to name it, they were actually put under radar by one of the report issued by one of the organization in USA, right, and there where it was the report was not good. It affected the share price of that company very immensely, and then the managing director of the company came up on a video communication, right, it was managing director, and then thereafter there was a chief financial officer also came up on through the video message and through a message or to shareholders, etc. So that was a crisis situation for the company, and that communication was known or is taken as crisis communication. It is the part or the job of the chief financial officer. For example, there is a recall of products like cars for time, ACs for times, even aeroplanes because of some technical issue. So there is a corporate communication team which takes care of this, but if the finances are involved, even the chief finance officer has to give some input to that corporate communication team, or may require to come directly, especially when the crisis is affecting the share market. Then in that case it becomes the responsibility of chief finance officer to come forward and decide the content of the communication to address that crisis, right. So such attempt, such function is taken as crisis communication by chief finance officer. Then this person, chief finance officer, has to communicate with investors as well. So investors are the people who have invested in the company, right, we all understand that. So it is the responsibility of the chief finance officer to have a very open and frequent communication with them, so that investors continue to trust the system, continue to get the feedback or the information or the updates on the progress, on the developments, on the growth of the business, and they are not, there is no anxiety between the investors. So there is a stability in the thinking, because this is the investors' sentiments which goes to the market and affects the share price, right. So investors communication is very important nowadays, especially if the companies are trading on, if we are talking of the big corporates, and if they are trading on the stock exchange, right. So investor communication really becomes important in that situation. Investment planning is the another aspect which chief finance officer has to take care. So it involves not only the managing the policies for the strategic planning, but also the investment, only the investment, that should we be investing in X project or not, should we be investing in Y project or not, should we be investing in X country or not, should we be investing in X zone of that country or not, should we be investing in a different vertical or not. So there are so many such issues, because when companies are expanding, they are not expanding only in the same vertical they have been working. They may like to expand entirely in a different line, right. We have so many business examples where companies have gone out of the box. There were times when companies were expanding only in the allied services, but nowadays entirely a different segment is explored or is been entered into. So investment planning also is the part of the chief finance officer's function. And then lastly, his job is to guide treasurer and to the controller both, because they both directly are reporting to the chief finance officer, the treasurer and the controller, right. So these are the functions of chief finance officer. Now I would be talking about the function of treasurers, followed by the functions of controller. Okay. So let's talk about the function of treasurers. So treasurer is, as we have already seen in the diagram, is the person who manages the cash as well as credit both. So it means his functions would pertain to these two broader areas, but we will be discussing in detail. Okay, so let's talk about the first function. It is obtaining finance. Second function is banking relationship. Third is liaison with top management. Here it's CFO. Fourth is investors relationship management. So let me discuss these things in detail. Obtaining finance. His job is, policy is formulated by chief finance officer. That's fine. So the chief finance officer said, okay, we will have 80% funding from equity, 20% funding from debt. Okay, well done. This is the guideline by the CFO. After consulting the managing director, this guideline comes to the treasurer. Now this treasurer has to actually obtain funds. He has to think which bank to approach to, which credit agency to approach to. So he is the one who has to explore all possible avenues for managing or obtaining finance, right. So that's the first and the foremost job of treasurer, to obtain finance. It includes cash, of course. So then second thing is that he has to always maintain banking relationship. The people, the banks which actually are extending the loan to the company, which are taking care of working capital requirement, which are giving the overdraft facility, and the big organizations, they do not have one bank, believe me or not. They are dealing with various banks, more than one banks for sure, and and if the operations are at world level, overseas level, then there could be extension, a very large number of banks involved in with one company. And if there is only one treasurer for the company, whole company, you can imagine. But generally in such cases, when we have overseas operations, the treasurer would be different. This is what is expected, but it all depends upon the number of transactions and the type of financing or number of cash and credit transactions company deals in. So, but nevertheless, be it treasurer at one city, or be it treasurer at the company as a whole in the country, or treasurer at the world level, the banking relationships are to be kept, to be taken care by treasurers only. The third function is that he has to liaison with the chief finance officer, and maybe for times even with the managing director as well. So that is the third function that he has to do, that he has to report to the chief CFO directly. He or she has to for times, attend meetings with the top management, managing director or CEO, and get or seek the guidelines, and also to report, also to update on regular basis, because this is the guy who is getting funds for all the functions of the management, be it marketing, be it preparation, be it production. The funds are in real sense being arranged by this guy, treasurer. And then he has or she has to take care of investor relationship management. The policies, investors policy is formulated by CFO, but the real relation management comes under the purview of treasurer. People who are invested in your company, they are to be taken care well, they are needed to be updated well, they are needed to be kept in loop for all the developments, for all the changes in structure, in financing requirements, etc. So, this is the guy who has to take care of that aspect. Then certainly the cash management from day to day operations or for long term, we need cash management. For example, there are companies where the salary payment on monthly basis would be in crores, right? The size of the business is such. And there would be company where the salary payments are minimum because the size is small, right? So, we need funds on the day of salary, be it first of every month or be it 7th of every month, depending on the date whichever has been decided. But we need to have funds to pay that salary. When I say cash, doesn't mean the hardcore cash. The cash means the bank balance as well. The salaries are nowadays paid in the bank account directly through RTGS or to NEFT, etc., etc., right? That's not we are talking about. We are talking about the liquidity, the cash, the currency availability of funds at the time of salary. And so is for working capital requirement. We have to pay to our suppliers. We may be having a credit policy, we are enjoying the credit policy for 90 days, but after 90 days we have to pay. All the businesses do not have such a long credit availability, right? It all depends on the age of the company. If the age is young, the companies may not get so much time to pay back, right? The suppliers have yet to test this company, so they do not give so much credit time to the company. So, here the cash requirement is not only for salaries, but to pay to suppliers, to pay for day to day operations. So, this cash management, when I say cash, it is not only the payment, the cash receipts as well. We have to receive, we have to collect from the debtors, we have to collect from all the sources, wherever we deposit some security or all the possible sources, or some interest or some dividend. The companies may also invest in others' shares and get dividend. Companies may invest in others' debt and get interest. Rental income could be there for companies, right? So, the cash management is both the payments as well as the receipts management by the treasurer. It is been done by him. And then the treasurer also looks into the credit administration. So, when we say credit administration, right, it is primarily the credit, giving of credit as well as receiving of credit, both. So, debt collection and credit, payment, the both receivables and payables management comes under this aspect of treasury function. Investment, the small, if I am saying the cash management, the treasurer has to take a call that how much amount of cash, minimum cash or balance should he has at bank or in currency in form at any point of time. Rest of the funds, if little bit in excess, they are invested in marketable securities, they are invested in short term investments are made. So, those investments are the part or the function of the treasurer, because we cannot keep, because the cash or the bank cash is idle. Cash doesn't earn for you. If it is there in the store, in the strong room of a company, it is not earning anything. So, we need to invest. But on the other hand, we have to ensure that we have enough cash to pay our liabilities when they arise. So, this assessment that when the liabilities are due and how much amount is needed, which month of the day, which month of the year is more demanding in terms of funds requirement, which day of the month is more demanding, the salary day, for example. So, these investments are made by treasurers basis on all these aspects. he has to take care of the schedule of payment, schedule of interest. You know, if the loan is been taken, if that, so when I say credit, it is mean that debentures been issued, bonds been issued, the bank overdraft facility, this all are, this is the credit administration, right? And we have to ensure that we have to pay back to these interest as well as the principal money whenever due, but nevertheless we cannot keep in excess in bank or cash, because the companies have do not have the savings account where we get little bit of interest. Companies have the current account where there is no interest, right? So it means the treasurer has to decide not to keep much money, but has to decide that how much should be invested out of the surplus money he has in the current account or in the strong room. Then the insurance of employees, insurance of machinery, insurance of building, etc., etc., all the assets, long term assets of the company, they are insured, right? So this is also a lot of task, lot of work here. Every asset is becoming due for renewal every other day. So he is the one who has to make a schedule, he has to keep an asset register and has to look after that insurance is been done before the due date, it is actually effective all the time, so that because there could be any in eventuality and the investment is in crores. You know, imagine the size of the plant any car company would have, imagine the size of the plant the aeroplane company would have, or the any other company for that matter, even somebody who's manufacturing toothpaste, even they would have a very large facilities of production. So much of investment in plant, machinery, etc., it needed to be insured. So this comes under the purview of treasurer. Okay. Then another is that he has to take care of foreign exchange management as well. Because when he is managing cash, he is managing credit, he is to pay certain clients overseas in some other currency, or he has to receive some money in future that could be in foreign currency, right? So this is also to be taken care by the treasurer. Then the pension fund which is maintained, endowment funds which are maintained at companies for the employees, even that will be taken care by treasury. To some extent the capital expenditure management, because he is the one who is taking care of assets register, he is the one who is actually funding any capital investment. So actual funding means he is managing the cash or the credit, he is actually managing the funds for any capital expenditure. So this also comes under the purview of treasurer. And the lastly, he is licensed with analyst and stock management, because analysts are the one who affects the share prices. So they are investors are affected by our analysts observations or views, comments in the market. So he is the one who has to liaison with the bankers as well as with the analyst and has to manage the stock as well. So these are the functions of treasurers. Lastly, I would now talk about the functions of controllers. So as we know that there are two major pillars, under the CFO. One was treasurer, another was controller. We discussed 12 functions under treasurer. Now I would be discussing a couple of functions, important ones, which comes under the purview of controller, and this will give you a very fair idea that how the total finance function is organized in any corporation. So the first function of controller is financial accounting, second is internal audit, third is taxation, fourth is management accounting, fifth is management control, sixth is budgeting and control, seventh is cost accumulation, and the last is economic appraisal. So these are the 8 points I shall be discussing with you now. The first one is financial accounting. Here it is about reporting, right? Treasurer doesn't report, right? He takes care of the cash, he takes care of investment, credit, etc. The controller is the one who is accumulating cost for every expense company spends, be it a toilet paper in a washroom or be it a machinery. The cost spent is accumulated by the finance controller, right? Of course, he need to seek help from all the people who are concerned, not independently. There are so many people working under him as well. So, the first thing is accumulation of financial costs for the purpose of reporting. So, financial accounting, be it preparing of ledgers, be it making of journal, be it making of trial balance, be it making of balance sheet, be it making of statement of profit and loss account, cash flow, etc., etc., right? And then dealing with the auditor as well. So, financial accounting is the foremost, the most important job of the controller. Then comes the internal audit. He has to ensure that there is an internal audit being done in the company so that the compliance is being made with the auditing part. This is an internal requirement. Filing of tax, tax reports or filing of taxes to the tax department is also the function of controller. So, companies, it is mandated by the tax act of the company of the country that every company must file at the report. So, taxation is also dealt by controller. Management accounting, which is a very broad area including standard costing, including responsibility accounting, all those functions of management accounting, be it assessing the break even point, preparing reports of where we would break even, which product is more profitable, assessing to shut down or continue with any particular plant or vertical. These all are part of management accounting. So, management accounting reports are prepared by controller. So, he has to make management control basically, which comprises all those functions which we just discussed, including of course the budgeting. Here preparing budgets, be it sales budget or purchase budget or production budget, all type of budget, cash budget, they are prepared. They come under the purview of controller, and he is the one who need to accumulate cost because he deals with costing as well. So, the cost accumulation is also important function for any company, especially the manufacturing company. Trading companies do not have this function so important as is important for the manufacturing, but nevertheless trading companies may have very high overhead cost, right? So, even that is becomes important, and nowadays the overhead cost is becoming a higher percentage or claiming higher percentage in the total cost of the product or service. So, cost accumulation is another job a controller has to do. He has to accumulate cost for material, he has to control and accumulate cost for labor, he has to or she has to accumulate cost for overheads. Under these three heads, then we may have many more categories under these heads. Lastly, the controller has to do the economic appraisal of assets. The assets which are used, their economic value changes, right? So, he has to decide the depreciation, if there is a fleet of cars, that what is the value of those cars today, to decide about the depreciation. He has to think of changing the depreciation policy, stock valuation policy. This is known as the economic value assessment. These all are the functions of controller. So, I think I have discussed in detail about the CFO's, Chief Finance Officer's function, then treasurer's function, and lastly followed by the controller function. And in total, these are the functions which are taken care at or which are carried under the financial management. So, it is such an extensive area, such a important one of course, and I try to make it as elaborative for you as possible. And with this, I would like to wind up now friends. Thank you very much.